Hey everyone, Jack from Trading Matrix here, bringing you part 2 of yesterday's dollar Swissy short trade. If you haven't watched yesterday's video, please do go back and watch part 1. So this is part 2. You may recall that we peeled half our position down around here at the 95.21 level. We saw some divergences coming in on intraday timeframes. So we peeled half, working to cover the rest at 95 the figure. We then had some significant retracement higher, reducing our paper profits. And because we don't like to trail our stops, we always want to exit on positive reversion rather than getting stopped out like this. We were working to close at 95.15, which was using our proprietary bands technology, a level that we picked out that we thought was very confident to get hit. Potentially could have looked to exit further below the 95 figure for a daily level. We decided to play it more conservatively. One of the things that Chuck really loves to talk about, and is such a truism once you know it, is that you always have more time to exit your positions than you think, unless the market's extremely volatile. And I would not class this market as being extremely volatile. And so it really does pay, especially when you've had quite a few R on side, to work to exit on positive reversion. So that's to buy below the mean, which getting stopped out on this kind of rally upwards would definitely have been kind of a negative reversion exit. We wanted to work for a positive reversion exit because there is just a much bigger edge there. Yes, you are taking the risk that the market could just re-rally and stop you out of the other half of the position. That is definitely risk and occasionally does happen. But I'd say more often than not with this, in this kind of market, working to exit on a better level will very often yield fruit, which is what happened. So we got out of this position for a 4.9 R winner. So we're very happy with that. And as you can see later in the day after the US inflation data, had we not covered our position any lower, we would definitely have been stopped out. So that's the risk of taking positions into big data releases with tight stops. As you can see, they can be very vulnerable to getting either stopped out or whipped out or both. So there we are. Wishing you a pleasant day. Thank you for watching, and we'll be back tomorrow with another video. Take care.